Well, 11:35 on a Big Show clock. Bob Quinn on the Big Show today. We're going to talk markets here with Brian Hoops. Before we do that, though, he'd remind you of a word that could put a grand in your hand. That word this hour is grand. G-R-A-N-D. Grand is the word, and you can put that in the little pop-up box, the website of the radio station you're listening to right now. You could be getting a $1,000 phone call 13 times each weekday. You get a chance to enter on, and we will give you another word coming up just about, 30 minutes away from right now. But the word that you need to worry about or need to enter, I guess, this hour is grand, G-R-A-N-D. And do we have winners in the state of Iowa? Sure we do. We had a couple just last week in this nationwide contest. So you need to enter to win, and in order to do so, you just put the word grand in that little pop-up box. We'd love to be sending $1,000 check your way. Right now, being brought to you by Hertz Farm Management. A big thank you to the gang there at Hertz for sponsoring this segment of the Big Show. Brian Hoops on the telephone line with me right now. Brian, Midwest Market Solutions. We are seeing soybeans enjoying a run today. What's pushing the soybean market higher, Brian?
Hey, Bob. Yeah, good to talk with you. The markets really kind of started off in the night session last night, not having any follow-through from the poor close that we saw on Wednesday. And so we had some short covering. It lifted us into the morning hours, and this is all coming on pretty low volume and virtually no news to push this market one way or the other. Didn't have export sales this morning and no private exports announcements. We finally had the weekly EIA report, and that was pretty much a neutral report as far as corn production usage for ethanol. It was just up slightly from the last week, and ethanol production overall slightly higher than a week ago with stocks climbing. So not much of a report there. But you can see the week turning lower here now, taking out yesterday's lows. And I think there was some sell stops sitting below that because we started to drop pretty quickly and seeing 6 to 7 cent losses there. So that's seemingly pulling corn off of its highs. It's pulling soybeans off of its highs, as none of these markets were able to build on any type of the rally this morning and take out a previous session high. So it's one that I think we're just kind of biding time, waiting for that option expiration tomorrow. The March grain options go off the board, and until then, there's just kind of positioning going into that option expiration in the corn, the soybeans, and to a lesser extent the wheat. But with the wheat dragging everything else down, we may pull back from these highs even further by the closing bell.
Brian, we've been talking over the last few weeks, and corn right now, December's at $4.78. Those are much better than it was a few weeks ago. So your marketing plan, what are you looking at as far as marketing corn right now?
Yeah, we talked last time I was on, talked about if corn gets in that 475 up to 485 range. Those are some selling opportunities as we go into the March planning intentions report. I think that's at the end of March. I think that report's going to be bearish for the corn market and show us that we're planting a lot of corn acres this year. We planted about 90.3 million last year. I'm thinking 94, maybe 95 million is a very real possibility this year. And based on that, it's going to probably cap a lot of rallies into the spring time frame for corn. But we need to buy those acres. So I would suggest, as we get 475, 480, and up to $5 mark, opportunities are there to make some sales on the corn for December delivery. Soybeans, there's not as good as opportunities, but we are over 1050. We've been as high today anyway, 1062. I think anything over 1050 is probably going to be viewed very favorable by the time next harvest rolls around, unless we get some sort of a drought or something that really trims our yields going into the summer when we have our growing season.
Brian, since we last talked, we've taken some wind out of this cattle market as well. Let's switch over to livestock here. We've got February futures now that 197, April down to $193. What's going on in cattle?
Yeah, so things have changed rather quickly. In the last couple of weeks, you went from extreme bullishness where cutout values were soaring higher, strong demand, and funds seemingly could not get enough of the cattle complex, to now where the funds are actually liquidating their long positions in this cattle market. Cutout values not improving whatsoever, and this is a disappointment because packers have cut their kills the last couple of weeks trying to prop up those boxes. When you kill less cattle, usually you have an improvement in the box beef values. That improves packer margins, and they just don't need as many cattle right now. So demand has really softened up, and boxes at midday were mixed, lower in the choice, slightly higher the select. That's not anything that's bullish. We need to have those box beef improve and move higher to show us better demand trends. Until that happens, I'm afraid we're probably looking at continued liquidation by the funds in a lot of these cattle contracts.
Brian Hoops with us. Hey, I got about 30 seconds here, but I have been watching the Dow index. We're down almost 600 points on Wall Street today. What's pushing that market?
Yeah, Dow was a little bit weaker here this morning. We were pretty well neutral going into the jobless claims numbers, and those were not a real bearish report. It was pretty neutral, but ever since then we've fallen off. I think there's still some concerns about inflation and the fact that we're not cutting interest rates, or probably will not be cutting interest rates in 2025, at least until June. It's a concern for the trade. So we've been pushing this stock market higher, especially like the S&Ps to the highest levels since back in January. We're pulling back today. I think corrections will still be bought, but they have to be pretty healthy corrections for anyone to be real interested in buying them.
Brian, folks want to talk Midwest Market Solutions with you. How can they do that?
Yeah, you can call me directly, 417-501-5132. Make sure you follow us on Twitter at Midwest Markets and at Brian Hoops for market information.
All right, Brian, talk to you about an hour and 10 minutes and get some projections and targets moving forward. Brian Hoops with us.
Food, fuel, and fun. We speak farm. This is The Big Show.
Wrapping up the Big Show today with a conversation here with Brian Hoops, Midwest Market Solutions. Brian, we've been holding on to these gains throughout the show today as far as corn and soybeans. Corn giving back a little bit, but we're still 1-2 cents higher. Soybeans 9-10 cents higher. What seems to be pushing these markets higher today?
Well, it does seem like, a little technical buying lifted us in the overnight markets into early morning hours. There was a little bit of talk from President Trump that he's going to sit down and meet with President Xi from China at some point, and kind of as a trade hoping that we'll reach some sort of an agreement relatively soon. I think we're still a long ways off from that happening. China has not bought any corn at all this year from us. They really don't need to buy any soybeans from us going forward until next August-September timeframe, when they run out of South American supplies to purchase. So I think that's going to be a very long, drug-out negotiation rather than a quick fix like we saw with Mexico and Canada, where instead of putting some tariffs in place, they pushed back those tariffs 30 days to continue negotiations. I think we're going to be looking at a little bit harder line from the White House on that. But yet the market's trying to move. Export sales tomorrow, option expiration tomorrow, so we're getting some positioning ahead of both of those. Well,
next couple of weeks, what do you expect to see out of this December corn contract, November soybean contract?
Well, I've seen some private estimates of predicting corn acres at 94.5 million. We'll get an estimate at the end of March in our planned intentions report. I would expect corn is going to try and move higher next week in the early part of March. Make sure we have eyes on that corn market trying to bid up and secure enough acres so that we can meet the demand that we have. So yields were not as good last year as what the trade had hoped. We didn't plant really enough acres, so we need to ensure acres in case yields are not quite as good as they were even a year or 2 years ago. So, yeah, I think we're looking at corn acres moving higher. Soybeans probably going to come under some pressure from that South American crop being harvested.
Now, 94.5 would be on the short side of all the earlier talk. I mean, we had heard talk of even maybe up to 96.
Yeah, the largest planted acres we've ever done was in 2012, I believe, and that was 97.2 million. I don't know that we can go back and challenge that area, but I would certainly expect 94 to 95 million is going to be in play, probably more than 95 million, but we've only done that 4 times in history that we've planted more acres than that. So it's kind of unprecedented to plant the 95 million or more acres, but I think we could easily see at least 94, most likely 95 to 96 million.
You mentioned South America. How's the crop coming out of the field there?
Yeah, the harvest that's going on in northern Brazil, it's seen record-type yields. Very, very positive as far as harvest goes. Results are positive, and weather is conducive for harvest. Next week and the week after, they're expected to receive some rains in northern Brazil. Could slow down the soybean harvest, but they certainly need it for the corn crop that's being planted right behind the soybean harvest.
Now, Brian, if folks want to talk markets with you, how can they do that?
Well, you can find a list of all of our offices around the Midwest at our website, MidwestMarketSolutions.com. If you want to call me toll-free directly, 417-501-5132.